Okay, so we are back to the first weekly recap or first week of January, and I'm going to do a little recap slash review of the week to try to understand where could I improve, where could I have tried to enter a trade if this type of week is my specific model. Where could I do that? At what time did the low of the week happen? At what time did the high of the week happen? And all of those questions about it. So I will not go in deep into the month because as we can see, this weekly range, this first 1 week of the month of January and of 2024 is the entire range that we have for the 12 month, 6 month, 3 month, monthly, and then 2 week. In this case, the 1 week. So before going to the charts, let me just talk about of my weekly one forecast, where the news for this week was we had Monday no trading because it was the Passover from 2023 to 2024, so it was the first day of the year. Tuesday no news, like a Monday, but with trading. Wednesday with red news at 10 and 14. Thursday with news at 8:15 and 8:30, and then we have Friday with NFP. So it's always like a not a rule, but something that happens every single month, which is the first Friday of the month is always in most cases non-farm payroll. So there are important rules for non-farm payroll, and there are some something that you have to tick around because you don't trade week two like you will trade a week one candlestick. So my idea was that this was forecast. My idea was basically that was I was looking at this drawn quality and at this order block. Now I was expecting to be violated above and not to offer retracement on downside. Like I was not expecting this order block to in some way, shape or form deliver lower or reject it. So in a bearish market profile or sell model, price usually rejects up close candles, like here, up close candle rejected, up close candle rejected, and so on, so on. But at this time, at the previous year, previous month on December, we had the December low close, which is also the low close of 12 month of the 12 month. Not the 12 month because it's also the low of the year, but it's the low of the 6 month candles. No, not the low. It's the low of the Q4, low of the last quarter. It's the low of the monthly of December, and it's the low of the previous week, which was last week, week 4 of December. And we had the low close, so we have now open, and we are likely to see open this low close, creating a change on state of delivery to then usually continue this displacement on the upside until we make the change in state of delivery to make the high and then the low, which I'm expecting that type of candlestick for possibly January. But don't go into deep. I was DXY looking at this. For our range, I was looking at this fair value gap and this size, which is each are the same as right here. So from 1 week, 1 day, I jumped into for our time frame. Plus, we have this intermediate term low. So I was expecting this intermediate term low to be respected the whole day, the whole week. So I was not looking for price to trade lower. This is after Tuesday opening. So Tuesday opened, and then I'm not a weekly forecast because Tuesday was already traded to, but there's kinda of a weekly forecast is. So I was looking for higher prices on the upside. So if I was looking at this is a major thing, you want to first look at DXY, DXY to give you some kind of idea of where the market is going. On this case, I was pretty much 70% looking at this. So this was a high probability drawn liquidity. This eyes, as well as this busy, and which is coupled with this CB as well. This is a CB, this 1-day fair value gap, 1-day CB for our CB as well. So if DXY up or DXY in the risk off scenario, then forex currencies ending on USD. So USD, GBP USD should go lower. And it's right, it's wrote right here. If on DXY I'm looking for this week's trade higher, this means that on USD EU I'll be looking for shorts, aka lower prices. And where was I looking? If I was looking at the week 3 high, so this was the week 3 of December high, then I'll be looking at this week 3 December low on euro, as it's shown right here. So I was looking at this fair value gap at the start, then it got changed into looking at this equal lows right here, because price indeed not reached into this drawn liquidity today, but it created equal lows above it, and we'll see this later on. So EU, it's me talking about the other that I'm expecting the low to be made on the second half of the weekly candlestick, which I'm going to explain more later. But I was looking mainly at lower prices from this discount to high, from this low to high. We pull a fib from here to here, and we have equilibrium around here. I was looking at this big fair value gap on the 4-hour time frame. On ES, I was looking for a downside movement. So I noticed that you're creating this swing high, and I believe that this swing high is not going to last. So from this low to high, like a retracement displacement, I don't think that it's going to happen, but I think that we are going to trade to this fair value gap and push one more time higher, because an item frame SMT has not been formed yet between ES and NQ, so I don't believe that price is going to, on either the future, enter a sell model or bearish market profile, but instead we are still going to deliver it on the upside. That's my idea. I can be completely wrong. So I was looking at this 1 week busy, because we have C1, C2, C3, but mainly because this was a swing high. I noticed that the swing high was forming, and then the next drawn liquidity that was high probability and not easy to get, but for a week 1 to be traded to, it was this 1 week busy that I was looking, which was this also a week 3 of December low. And I can see that we have this range high, range low basically trade, but let's not trade patterns. Let's understand the logic why. And I mentioned that the logic why was because people are trying to sell, expecting this to be a reversal high, an high time frame reversal, trying to catch a high time frame long term high, and that is not usually what happens, because they are trying to push the button, then they see a market structure shift slash breaker, which is a fake breaker of not breaker, a fake breakout, and a fake market structure shift, and then we got on one leg higher again to take all of these early shorts. So this is accumulating, and I mentioned that on January price was going to create possibly a accumulation candlestick, so one of those choppy kind of January candlesticks in general, because because that's usually what January does, and that's the current logic now, where retail and ICT is all trying to catch eyes. Everyone's trying to catch an high time frame high, because everyone is greedy, trying to make a lot of money, so we want to catch the TP top and the TP bottom. So there, everyone is trying to enter on this displacement, retracement, blah blah blah. That's my idea. Can be completely wrong. But oops, I changed the wrong thing. I'm sorry. But going into the then, yes, this was around liquidity, like I mentioned, lower prices, and I had this fair value gap noted after the Tuesday candlestick I have been traded to, We can see here the time. It was 2:30 p.m. on Tuesday, and price was had already done the Tuesday daily range candlestick. Already had played out Tuesday on itself. So this was all for tape reading. So let's now jump into starts. Remembering that it was NFP, and I completely forgot that between the start of the year and everything, like every work and things that I have to do and Notion and things like that. Completely forgot that was NFP. Starting with DXY, let's not get through it fast, but get through it relatively fast. So what can I see? Price reached into OTE, like I mentioned not a long time ago, but in the previous recordings, if I'm not wrong. And closing the year, and this was the year. We had the open, low, high, close, but that's not what I'm trying to tell you to. I'm talking to high, low, so it's not okay. Sorry for the pause. But yeah, we finished last year with this candlestick where we had December. Look at the bottom. December opening around middle of these two candlesticks, where we had price trade lower. So open, high, low, close. Which for this month we had the open, and we are now trading higher. So this low change on state of delivery, because for a candlestick to make a let's say for example like this is the opening price. It's not. It's Friday on December. 100%. I can show you. The real was Friday. You see, Friday one. But let's say that this was the the monthly open. We had opening price, the Judas on the upside. So Judas, then the reversal to make the high of the month, and then to make the low of the month, there's another change in state of delivery that needs to happen to then close this candlestick. And this is immediately followed by December by the January 2024 opening, where then we had price trade on the upside right here. December and January P3 open bar open close. So we are currently on the open and premium week of December. Just taking this for this note. Another thing important is opening price, opening time, and closing time. Let me just take this lower so the lines don't get on our way. So we have the opening time for the candlestick and the closing time for the candlestick, which an opening time is a previous candlestick closing time, and a closing time is a next candlestick opening price. What I mean by that is that the candlestick, imagine that this is a candlestick, right? The close of this candlestick is the opening of the next candlestick. And the opening of this candlestick was the close of this candlestick. So everything is like in a rhythm in some sense, because we have open, low, high, close, and the close is the open that creates the high, low, and close. That's the idea. So daily candlestick, what can I see? Monday was a muted candlestick, which means that there was no price action. Markets were closed, and we can see here the low. Then this fair value gap was used and closed above. So this is the first, in some sense, sign that the price is going to trade higher, at least into a premium of where this dealing range or this dealing range, whatever you want to try to use it, or whatever makes sense in the current fractal. And with that I can see that this was the last day of 2023. Monday, first day, Tuesday, we have the open above this fair value gap, this CB that was inversed, like a balanced price range in some sense. Open, low, I close. What can I see again? Closing above another array. I'm just going to delete the yearly key level, just more clear on the charts. I can put them back later on. So Tuesday expansion upside, reaching into the order block, which I mentioned that I wanted it to see being broken on the upside. So I was expecting it to be violated and not to be like respected. So I was not looking at this fair value gap as a meaning of a continuation trade to downside to make a new lows, but I was looking at it as a sense of a drawn liquidity at the first place. So this was a PD array that I was looking at a drawn liquidity, and then later as a sense of inversement or inversing the CB to then possibly continue on the upside into these highs or these highs. So after the Tuesday, after the Monday opening, Tuesday expansion, we have this Wednesday delivery and reaching into the drawn liquidity. So at this point, there's no more need to try to trade. It's actually in the not complement, but like in synchronicity with the ICT concept, where he explains that on NFP weeks we should not trade past Wednesday. If I'm not wrong, New York session. So at the end of the New York session, you should not trade the NFP weeks. And isn't it funny that on NFP weeks, most of the move is made from the first half of the candlestick until to Wednesday, where we had, if I'm not wrong, I can be completely wrong, but I think that is 138 pips, and then on the second part of the candlestick we had 120 pips basically. So I think that engaging in the first half is always better on NFP weeks, because on week one we always have this kind of candlesticks that are mainly, I'm going to write on week one of any candlestick. Tá, esta ideia que eu estou aqui a falar está aqui escrito. Portanto, como vemos aqui, low close, e depois tivemos a continuação do upside desta change state of delivery, desta bullishness, desta current market profile, o que pode, that can be short term or long term. So I was talking Portuguese for a second because on my daily recaps I talk in Portuguese. So it's 20 minutes now on the DXY. Let's just finish. It's Let's also okay. Now going lower into the 4 hour chart. What can I see? It is just those scammy weeks in some sense. But what I can see the intermediate term low that I mentioned. I can see also that coupled with this 1 day CB that was inversed. I also have a 4 hour CB that was inversed with a fair value gap, creating this intermediate term low. I could pull up a fib something like this, so it was actually close to the just the -2 and -2 that 5. And then you can also like this and have the 4 standard deviation. But I'm not not a believer, but I'm not a guy that uses a lot of standard deviations unless we have the Judas swing and then the Judas swing is confirmed. So it forms a breaker. So turtle soup, Judas swing forming a breaker, and then I will use it like as that breaker standard deviations that ICT taught. But the main idea is that weekly open, weekly midpoint, yeah, and weekly close, which is at the weekly open of the next week, which is actually fine. I don't think that's something to worry about in some sense. I think you can work around wherever you want. But look at how funny this is. Where follow my cursor is better. We have the open low. And I'm going just to write it. We have the open, then we make the low, the high, and the close. And this candlestick is divided on 2 halves, and on those 2 halves we have the same thing, the same open, because the open never changes and the close of a candlestick never changes. We have the same highs and lows, but this time they are more fractal in some sense. We have this high followed then by, so this is first half open, low, high, close, close of the first half, which is the open of the second half, and followed by that we have the open traded lower into the inverted CB. So open, this actually is a Judas swing and things like that. So which this is followed by then by the open I. So notice that before making the I, price first needed to trade lower. So first a Judas swing below the opening price, creating bullish orders, not bullish orders, but bullish sentiment in some case, or this is basically the open close, and this continuation is basically a retracement from this open, from this high close continuation of this retracement into this fair value gap and into this 1 day CB inverse Judas swing on the upside, making the high of the week and the high of the day, and then low close of the second half. So open of close of the second half, first half, open of the second half, high, low, close. Basically this. And even more funny is that if drawing on the path with this will be basically something like this, where we had the open followed by the low, high, the return, delivery. We have this scammy week, which I'm going to just show you in here because it's a scammy week, but the bodies tell the story and the wicks do the damage. Falling into delivery into the drawn equity. So at the first half, I really think that you don't need to trade more, in my personal opinion. This followed to making this first high of the first half, and then closing the first half, which is followed then by the close of the first half, opening of the second half, where we had this continuation of the retracement from the high close, the Judas swing, making the eye of. So notice all the eye of the weekly was made on the second candlestick on the second half, and the eye was made on the first half. This is, imagine that this is a Tuesday low of the week, Thursday eye of the week. In this case we have the Monday, on this case Tuesday low of the week, and Friday eye of the week. Just like that, and this would be half of the candlestick, and this is basically our price basically interact on the far candlestick of the weekly of the weekly candlestick. So I'm going just to go now to the 1 hour and not lower. So I can go into the 1 hour, and on the 1 hour, then this, and even in the 4 hour, you can like divide it. So if it's the one day, not the 1 week, then you can divide it on half of a week, which is like 2.5 days. So that is possible. So the best is 2 days, 3 days. But not the best, but that's okay in some sense to be used, but not necessary. Uh, we can go automatically from the weekly into the daily, but you can also went straight to the 4 hour. And what can I see is that the eye of the week was made at a 4 hour CB inside of a 4 hour PD of a 1 day PD array. I'm sorry. So this box was a 1 day CB above my drawn equity. So anything above this was like a bonus of my trade. This is the low hanging fruit. But if price reaches into this volume imbalance or gap, or if it reaches into this CB low, it's always good. It's like uh, uh fuck, what it's called, that fruit. Something in top of the cake. You know what I'm talking. A cherry in the top of cake. And same thing is on the 4 hour. Notice how I will delete this daily, but notice how the 4 hour low was made inside of a 4 hour key level. So 4 hour CB low inside a 1 day key level, and same thing here. Which if I go back to the on that droid, we have a 4 hour key level which created the low of the week at a daily inside the daily key level as well that was inverted. So we have this intermediate low, and this intermediate low shouldn't be traded to not this close. Then we can also divide the halves in halves, but I really think that at this point you should divide them in the three portions. So like a PO3. I don't know. This is something I have to study, and I can talk a lot about it. On the daily chart, what can I see? We have the open of the week. So this was the opening price in some sense. And price is below the opening price, below the opening price. Accumulation, we have this expansion on Tuesday, reaching into my drawn liquidity, followed by more accumulation, trading above this 1 day CB and closing above it. Then we have this 21 week, which I don't know what happened right here, but we have this week to take out everyone that was logging and trailing basically trailing stop losses from Tuesday expansion. This is followed then by the Wednesday opening, where you have price reach into drawn quit. So notice on the first half, we have already my trade set, which I will probably try to engage on this 3 hour low, because my idea of trading is trying to catch the highs and lows of the week, redefining those into daily highs and lows, and then redefine those into 4 hour, like so. Imagine that we want to catch the weekly high, and I would redefine that into a specific session and a specific day where that high or low should be made. And I'll try to catch up, especially on London session, which is the session that I want to trade more. So this will be a good trade idea for today, which for here, where we have the open of the week, price is below it. We have here an SMT, and before reaching we have week this week on downside, and our stop loss is safe. Why? Because it's at a 4 hour intermediate term low. This is the 4 hour intervals. This is 4 hour intermediate term low. So price is we are safe to assume that this is not going to be reached to, not going to be traded to, and this is why I was bullish, because of this intermediate term low. So I think this is all for DXY. Then on the second half of the candlestick, like I mentioned, open continuation of the high close, making this short-term low, which was the Judas swing expansion. So from this low to high, we have this fake move, then create the real move of the second candlestick. So that's it for the DXY. I think I don't have that much to talk about it. 50 minutes chart, there's not much of it there. I really want to touch it. So that's all for this, and now going to Euro. So everything that I mentioned on DXY, just DXY, just inverse it. So, okay, I'm sorry. So if bullish DXY, I'm bearish EO. And bearish where? Into the same, not same, but close tranquility, which in this case it is low. So we can see that we have the open, not a really creating not a high basically. So immediately after the opening, price displaced on downside. On daily key level, what can I see? I can see that this fair value gap was inversed and rejected, so price is indicating that lower prices are likely. Same thing here. I can have the weekly open as well right here. We have Monday opening with Tuesday and some signs trading higher. Big range on Tuesday, Wednesday small range, creating equal lows at my drawn quit as well. We can redefine this, but it will be the same if it was here or here, because they are at the same relative equal lows. In this case I'm going to use this because this is the weekly low that I was looking at, that is inversed from the XY. This is then followed by Wednesday rangy candlestick in some sense, followed by this Thursday candlestick trading higher, and then Friday NFP we have this open low high close trade where it was a lot of not sharp, but this type of candlesticks are good to catch, but they require some study, and I don't know what to call them, because they are very wiki in some sense. They have a very small body, but they move the dot around it. They move the dot throughout the day, creating a lot of range. So on the low time frames, what can I see? I can see that I have the on the 1 hour in this case, Tuesday expanding lower. Just I think, yeah, just notice one thing, that the half of an half, it's one day. Same thing here. Notice it. Be also because I think that this is because Tuesday was muted, so we have 4 days. Because Monday was muted, so we have 1, 2, 3, 4 training days. But even though that, man, let me just text, try this live in some sense. Sunday, just yeah, it's completely different. It's completely different. Then it complete yeah, it's completely different. It completely changes. Then it's one on the first half and 1 a.m. first half and 1 p.m. on the second half to make the 1, 2, 3, 4. Okay, I understand it now. Because now the ranges are more wider, and the way to tech try this or test this, I think that's how we say it. It's just to pick data range 24 bars, data range 30 bars, completely different. Same 7 days, 6 more bars than the other one because it's a full week. Okay, now talking about Euro, same thing. What can I say? Tuesday big range, Wednesday small range where we have a continuation lower, creating these equal lows. So I will just redefine this to this, just to be not perfect, but to be at the correct point in some sense. Low above, we have a low above the key level, above the drawn liquidity, and we also have this turtle soup, which creates and ends the first candlestick. So on the weekly candlestick, we can see that we have open eye, low, close, like we saw, right? It's a down close candle. But on the 4-hour candlestick dividing it, we have the open eye, low, close, open, low, eye, close. Same thing. Notice that from the passover from the first half to the second half, we created a turtle soup to create the low, close, open, and then we have the continuation of this move. So you continue higher into the Wednesday and to the 4 CBI, where at this eye, at this 4-hour CB, then what can I say? I can say that price traded into it, made this eye of the second half. Then we have the Judas on the downside, Judas, reaching, reaching and into the drawn liquidity and into the weekly low, making a new week low on Friday, on a discount of the opening of the week, on a discount on the opening of the day, on a discount as well of the opening of the half of the candlestick, and then we have this Judas and reversal to make this like Friday. Thank God it's Friday trade in some sense. Not in some sense, but because it isn't, but creating the reversal of the candlestick. So weekly reversal, the first weekly reversal to make the opened eye, which is very small, and then we have the second reversal to make the eye low, close, and then retrace or reverse on the upside to close the candlestick of the week. On the 1 hour candlestick, what can I see? So, like I mentioned, Tuesday, 3-hour eye, as well coupled with DXY 3-hour eye of the week, and eye, on this case it's DXY 3-hour low of the week. This followed then by the big expansion, inversing that daily fair value gap. So we have bullish PD arrays being violated. We have this fair value gap violated, order block, another fair value gap, another order block closed below. So I was looking at this this CV as a measure of like retracement continuation or protraction continuation. So on the hourly chart, after the Tuesday large range, we have a lot of accumulation on the New York on the AM session of Tuesday, creating this low. So notice one thing, that we have this turtle soup, and what we have the low close. So we have the turtle soup to make the Tuesday high, low, low, close, which offer this open of the Tuesday candlestick if you are using the 17, not 18. So we have the 17 continuation, then movement on the upside, and same thing here, especially at Wednesday, which is like Tuesday first morning, and like Tuesday first like hours of the day, and Wednesday last hours of the day to make the low. In this case of the same thing, we have 10-hour this turtle soup to make the low close, and this low close then was followed by this continuation on the opening, continuation upside into to the round liquidity, into these liquidity pools, equalize, whatever you want to call, reaching into the CB. But we created equalize at the CB because this was a very shallow high above it. This is followed by creating the Judas swing, which was this in total. So notice how everything goes from highs to lows and highs to lows and highs to lows. Isn't it funny? Like in some sense, from some idea here, we have this low 32, person reached higher, not able to close it, not able to trade into this low because it created a SMT between GBP USD, which I can show you. I can show you. Where is it? Where is it? Right here? No, right here. So it created this SMT where the price is just more bullish on GBP USD, which is usually for a weak one. But we trade lower. Sell side taken. So we have sell side taken one time, sell side taken two times at the correct time of the week, of the day. No, sorry, of the week, of the week, of the first half of the week, and of the day. Well, then from these sell side, we move now to buy side at this correct time of the week, correct second half of the week, and correct time of the Thursday candlestick. From buy side, we then this is the inception of the move in some sense to trade lower, making into the first half low into the drawn liquidity, into the time frame drawn liquidity, also at the correct time. What time? News events and FP, which created the reversal to then from sell side move to buy side. So it like it amazed me how not good I am, because I'm not good at this. I didn't make money this week because I was not trading, and I think I will not be trading soon until I have my model made, because I have not my model yet made, but I think that I'm getting there. I think that I'm finding what fits me and what doesn't fit me. But it's funny, your highs and lows is everything. It's like a city says. Price on those two things, which is it goes higher for all highs and it goes lower for all lows. And if it goes higher for a CB or lower for a busy, that busy and CP, or that fair value gap, or that imbalance, in some sense, are highs and lows. So this CB is an high and low. Do you know what I mean? That's just it. So I think this is all for Euro SD. Now on ES I think it was more easier to trade in some sense because I have the clear down liquidity. I'm used to trading, used to watching. Yes, I'm not EU because I'm not a forex trader. I'm just doing the transaction because I think that it suits me better, the style of trading the weekly range and trading the London kills on in some sense. So on the weekly I was looking for the swing high to be made, and in this case reaching, fuck, how we say it correctly, reaching, no, reaching is like making money and getting richer, reaching, reaching, I don't know, but drawing into this CB, in this case going into the busy consequent encroachment. On the day we have the Tuesday opening of the week and Friday closing of the week. This is followed by price reaching into the drone pretty on the first half, on some sense, but creating this small low, which is then traded to back below it once more on Thursday, and then on Friday once more, making the Friday low of the day. So we have in some case Tuesday half the day, Friday, not Tuesday low of the week, Friday low of the week. On 4-hour candlestick, what can I see? I can see that after this shift, even though that I think that price will reach into this, will draw up into this consolidation, because my idea is that price will now on the next week or later in the future will draw into this, but don't want to talk about this now because it is a recap. I can see that up close candles are now being in some sense what's the word, engulfed on the downside. So we have this 8-hour candlestick on small candlestick in some sense into this CB, which is then completely followed by being engulfed on the downside with energy. So an up close 8-hour candlestick followed then by an 8-hour candlestick on the downside, engulfing those. Same thing here. We have the Tuesday 14 4-hour low. We have the opening of the Tuesday candlestick, the 18 opening. This is followed then by on the next 8-hour candlesticks, these ones 22 and 2 to be engulfed on downside, and so on so on. Then on Tuesday we have Wednesday we have this trade where Wednesday expands on downside. At 10-hour candlestick, 4-hour candlestick, we have price creating this rangy candlestick in some sense, this consolidation candlestick, where we created a low above the ground liquidity, creating the idea to retail that equals were made. This is followed by the 14 4-hour candlestick opening, trading higher into this fair value gap, and then the continuation lower. And this is where the fun gets. So now, so now we created an intermediate term high. The drawn liquidity is 32, but like I mentioned, this is not enough of a purge. This is like, even though that it's like a sweep in some sense, but we want to see a purge of this level and price to trade actually below it and take all the sell side, reaching into this CB, into this BZ, and basically trading more deeper in some sense, because this almost feels like it's creating a double bot pattern. So this is followed by the next week, or next day, next half of a week, second part of the week, where I opened the chart and I immediately could see consolidation. So we are creating inside candlesticks inside of this range in some sense. So this big outside candlestick is then followed by these inside candlesticks inside of this high and low. This is followed by price reaching into a premium of it at the 2-hour, which creates this delivery on the downside into the range low, and then from the range low we have price reach into this premium week consequent encroachment. Why didn't it reach the range high? So range low, range high, right? Wrong, because the current market profile is that we are bearish and bullish candlesticks are being engulfed, and bearish PD arrays are being rejected. So every pop above an eye is going to be sold. In this case, we have this pop on Wednesday, creating this intermediate term high. So this range high, range low idea of like range low gets traded to. So now range high needs to get traded to. It doesn't, because it's an intermediate term high. If indeed I want to see lower prices on downside. This needs to be respected and not broken above. So after this Judas on downside, taking the previous day low, taking the range low in some sense, we have price expand higher into a premium of this outside candlestick, reaching into the premium week, where then we have the Thursday change in the state of delivery, making the high of day for Thursday, and we have this continuation lower, 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 reaching lower into this order block, basically right here, reaching in this order block in some sense, into this opening price almost, reaching into the 1 day busy low, as you can see right here, almost into the 1 day busy low, where at it we can see that was at 6 hour, it was at 8 hour, because it was at NFP, we then created this low high of Friday. On the hourly chart, what I want to talk about is how this 4 hour fair value gap, which I noticed now, was stayed open as a breakaway gap, as we can clearly see it right here, but price used it this week as something. So let's not annotate the fips and let's see. We had this 8 hour candlestick engulfed, followed then by this rangy candlestick in some sense. I don't know the specific name of this type of candle. Then price reached draw higher into the premium week consequent encroachment, and then followed on downside. Why didn't price reach draw to this fair value gap? So why didn't price traded higher into this fair value gap? Let's ask why. And I'm going to write it because this is important. Why didn't price reach slash draw into this 4 hour CB before continue for the continuation lower? Remember that highs and lows are what makes the marketplace, and CBs slash BZs slash fair value gaps slash imbalance are made from highs and lows. The fair value gap needs a low and a high to be an imbalance. What I mean by this, so we have 1, 2, 3 candlesticks which make the fair value gap in itself, right? So this 4 hour CB low wasn't reach slash draw to then act as a reversal POI. Damn, the music is ending. A whole playlist. Just put on pause because I don't listen to another thing. So far this is that's why I still like to see brick away caps form, because that mentions that on the low time frame the intermittent MI. So on the 2 hour, we could go to the 3 hour, but 3 hour don't say as much. So CB low. Speed of 15 minutes because 15 minutes is the perfect, not confirmation, but in some sense, perfect balance between the 4 hour and the 15 minute. So I think that this is all that I have to today. It's a long session. I like doing this. Next week I'm going to try to not do the daily because everything that I'm doing right now I do on the daily candlestick as well for each day. So I will be trying not to make it, and I will see where all these next weeks goes without making the recaps, because every single recap takes me like between 20 minutes to 40 minutes to be made. So it's all. I have nothing to say. That's it. Good luck and good trading.